Welcome back, everyone. 38 minutes after, Yale University may be losing big time with its endowment strategy. The second richest school after Harvard said its investments lost over 24% in the past year because of the economic downturn. Bloomberg's Jillian Weed joins us with more. She was the first to actually break this story. I'm jumping to get to it. So first of all, Jillian, 24% sounds like a lot. It is a lot, but how does it compare to kind of other Ivy League institutions?
So the 24% loss is about $5.6 billion. That sounds like a lot, but it's basically in the ballpark of Harvard, Brown, Cornell. But of course, we saw Columbia and the University of Pennsylvania reporting 16% losses. So that's quite a substantial difference. It just depends on which Ivy League you're looking at.
How do those losses compare with other Ivy League schools? I mean,
so there are 8 Ivy League schools. The biggest ones in terms of wealth are Harvard and Yale, and I guess those are the ones that endowments watch most closely. Harvard, its investment loss was 27%, so if we look at the S&P over the same period, that's a 28% drop. And then if you have a stocks and bonds portfolio, let's say 60% stocks, 40% bonds, Harvard described this as having a 13.5% drop. So if they really did stick to their traditional portfolios, they would have done a lot better.
Jillian, Yale is kind of important because a lot of schools model themselves after Yale, correct?
Yeah, and I think people look at Yale as they were the top performer in the decade ending June 2008, and even in this past decade, the one ending this June, they beat Harvard again, 12% average annual gains compared to an 8.9% at Harvard.
it would seem that the focus is on Harvard, what with El Arian coming there and leaving, and a lot of people talking about the endowment because it's the biggest, right?
Yeah, I mean, it's the richest school. I think that there's been focus on Harvard just because of its issues over time, turnover, compensation with Jack Meyer leading a team there, and then taking a bunch of them to start his own investment firm in 2005, Convexity Capital. And so in the past year, we've had Jane Mandillo come in. She was at Harvard for 15 years, and then she led Wellesley's endowment for about 5 years before returning to Harvard. So that's that's a story we're following very closely.
All right, going back to Yale, though, in terms of that 24% decline, what brought it to that point?
Well, its asset classes that performed the worst were real assets, which includes energy, and that dropped almost by half. Also includes real estate, and private equity dropped by 24%. So those were the downers for the portfolio. What helped hedge those bets was a fixed income, and that was the best returning asset at 5.1% increase. Unfortunately, they had only allocated 4% of the portfolio to that asset class because of their belief in equities over time. And it turned out that equities as a whole, U.S. stocks, developed world stocks and emerging market stocks did beat benchmarks, and hedge funds also helped to hedge those losses.
Just got a few seconds left, about 20 seconds. So net, we've heard from a lot of it, or seen what a lot of endowments have done. I mean, anybody kind of the standout in terms of the worst or the best?
I mean, so far the worst in terms of investment decline appears to be Harvard, 27% drop, and Columbia and Penn, 16% ballpark declines. Those look like the best so far, according to the Ivies anyway.
All right, got it. Jillian, thank you so much.
Thank you.
Bloomberg News' Jillian Weed.